Before we get into today's video, and I have a lot to share with you guys, I just want to speak from the heart for a moment, okay? To be quite honest, I'm sick and tired of this market. I'm sick and tired of constantly having to talk about all the bad news that's going on in the financial markets, and there's a bunch more bad news I got to share with you today in the crypto space, in the stock market space, in the overall economy. All three of those, I got bad news to share with you guys. All stuff that's just come out here. It's very bad. And I read comments sometimes recently, and it's like, I'm unsubscribing. All you speak about is negative stuff now, and just like those type of vibes, right? And like, I hate it. I hate it just as much as you. I wish I could just talk about the positives. And it feels like it's been like for a while now. It's just negative. It's not fun to, every day I wake up and automatically assume I lost money in the market, right? Because that's all that's been happening for quite some time. Every day I wake up and I'm like, okay, I'm gonna make a video. What's going on bad? Because that's just the reality we're in right now, right? It's just bad news. There's things to be optimistic about long term, but in the short term, there's basically nothing to be optimistic about, to be quite honest, in the financial markets. And I don't care if we're talking about the stock market space, the crypto space, and especially real estate moving forward. And so, therefore, I just want to be quite frank. I'm as tired of it as you guys are, but at the same time, it's like, what are we going to do? Like, put on, as they say, rose-colored glasses, right? And act like everything's perfect and, there's nothing bad going on. I got to call it the way I see it. I got to show what's actually going on. And the fact is, things are bad and things are getting worse, to be quite honest. And so I just want to speak from the heart there on that. And I'm an optimistic person. I can't wait to the days I can be optimistic again and we get to talk about the good stuff. And, this company's earnings just went up this much and this company's revenue just went up this much, right? And this industry's booming and the next great opportunity and things like that. But we're not in that time period right now. We're going through a crash, right? And going through crashes, if I was on YouTube in 2008, I would have been talking about all the bad stuff that was going on in 2008. There was nothing to be optimistic of, right? And so when you're going through one of these crashes, it's just the way it is, right? Stay optimistic on the long term, buy the dip, but at the same time, don't be fake about it. Like, if there's bad crap going on, you got to just call it the way you see it. You got to share what's going on, man. So it is what it is. So just want to get that off my chest right off the front, okay? First, before we get into stocks and before we get into the overall economy and a lot of bad news I have to share with you, I want to share bad news in regards to crypto markets. So, the crypto market's a complete disaster right now. And, even on the exchange side and things like that with these smaller companies. And basically how all this started, if you're wondering, like how did we get to this place where all these different companies are going under? How this all really started was not actually necessarily from like cryptos dropping in price. It was really the Terra Luna situation. That's really what ended up sending everything into a spiral here. And because of that, there was this hedge fund essentially that, was way over leveraged and into things like Terra Luna. And basically they caused all these things to kind of like basically collapse, right? Celsius, the BlockFi situation, which now they're supposed to get potentially acquired by FTX. I wake up to this email today. Voyagers, today we make the difficult decision to temporarily suspend trading, deposits, withdrawals, loyalty rewards. The failure of borrower 3 Arrows Capital, 3AC, to repay a substantial loan from us means that this is the right path forward. And once again, that all happened from that Terra Luna crap situation. So that literally that one thing just caused this massive spiral down and just a complete disaster. And like, it shows you how systemic things are, and that honestly regulation has to come in that space, to be quite honest, or things like this will just keep happening in the future. So, just very, very frustrating. And obviously, in my mind, I've written off the $300,000 or whatever I've lost in Voyager, and that sucks. And it happened to snap of fingers. That's the craziest part. It's not like it was a slow grind down. It was like all of a sudden, there was a fear about the whole Terra Luna situation. Then all of a sudden the hedge fund goes under and just boom, 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 boom. And it's just dominoes falling the wrong way. And it's just painful. But yeah, that's crypto space. It's a mess. And, the mess is probably not over. That's just bottom line there. It's probably going to get even messier before it's all said and done. Okay. Stocks. So NVIDIA, this stock just now crossed down over 50% year to date. The stock has been overcut in half. Obviously, it is one of the best companies in the world, in my opinion, NVIDIA. I don't personally own the stock, but at the end of the day, NVIDIA is a beast, and you can't deny that, right? But we also can't deny the fact that the stock has been overcut in half now, just year to date. So in 6 months span, the stock has fallen almost 52% now at this point in time. And this is one of the largest market cap companies in the world, even today at 363 billion. Now, the worst part for NVIDIA is, the fall's likely not over in this stock, okay? The issue NVIDIA has right now is, well, it has a lot of issues right now, okay? But here's the deal, okay? One, it trades kind of rich, right? A 42 trailing PE, but the biggest problem is everybody's expecting the next 12 months to actually be far more profitable than the last 12 months. And I want to go out there and say it. I think there's a real possibility that this company either flatlines or actually is less profitable in the next 12 months than they were in the past 12 months. And I don't think Wall Street's even looking at this yet. And if this happens and this plays out, this is going to send shockwaves through a stock like NVIDIA. And this is a stock that could go under $100 in that sort of situation. I think their revenues could likely end up declining, believe it or not. And no one really has that priced into their models right now. And so this is a very, very scary situation here with a stock like NVIDIA, right? And we've obviously seen GPU demand normalize and come way down, obviously. I mean, folks were charging like crazy prices for GPUs. It had gone completely insane. And, those are now, much more in line as what we see. And, this is something that's not just going to play out for a company like NVIDIA. It's going to play out for AMD, and that's why AMD stock has fallen over 50% in the past 6 months or so, right? And so these stocks are just kind of in this, space now where I think, when it comes to companies that have been spending on a lot of GPUs for obviously like cloud and all those things, I think companies' capital expenditures are all going to pull back because we're likely in a recession, and we got more confirmation that we're actually in a recession right now that I'm going to show you in this video. So what's going to happen is a lot of those companies are going to pull back. Plus, demand from the consumer side is just not there right now. Plus, they just had a massive channel fill. So now, companies have ordered up a bunch of inventory because they've been, obviously just haven't had inventory for GPUs for the last couple of years. So they're like, let's get our hands on as many as possible. So there could end up being an inventory glut potentially as well. So, it's a kind of an ugly situation. Now, if you're a long-term bull on AMD and NVIDIA, you have a lot to be excited about, right? And you have a great entry point for probably the next 6 to 12 months. But, there's nothing to be excited about in that space anytime soon, in my opinion. And I think it's really possible those companies could see revenues decline, and those companies could see profitability decline over the coming quarters on a year-over-year basis. And almost no one on Wall Street is pricing that in right now as even a possibility. And that's the scariest part for stocks like that are already down 50+% year to date, right? So, a really green day out there today. I mean, well, I don't want to call it really green day, but it was green. S&P 500 up, NASDAQ up, Dow up, Russell up. Here's the deal. No one believes that. No one believes that what you're seeing right there is even real, okay? 2 reasons. First reason is every single rally we've done has been sold into at the end of the day, right? So why start believing rallies now when every single time you even try to get your hopes up around a rally, it just loses, right? The second part is this was the first day of a new quarter, and Wall Street wanted to try to attempt to give some positive momentum to a new quarter, okay? And the issue with this is, I don't know how many people are buying the fake, essentially, in this whole situation, right? It's like, oh yeah, let's buy everything up, let's send the market green, let's put positive vibes out there. They still had trouble eking out any sort of gains today. I mean, the Dow was up, 1%. The NASDAQ was up less than 1%. So it's like you try that, and it's still a tough sledding out there. Let's just put it that way. It's tough sledding in this sort of market, right? And you look at a stock like Affirm today. This stock was down almost 5% when all the market was up, and pretty much at new lows after new lows. And this just shows you that this is a buy now, pay later company, right? we'll see if people actually pay later. But this is, Wall Street saying that no, we still don't believe in the economy. We still don't believe that people are going to repay for products like this, and somebody's going to buy a toaster and with a firm and pay it back in the future. Like at the end of the day, Wall Street's still saying that we're in recession, we're going to recession, and a company like a firm's not going to do well in that sort of situation. So they're not buying it, right? They're selling that heavy on a green day today, almost a 5% move there. Robinhood was down again today. You know what I was thinking? I was thinking about this in regards to Robinhood, and I don't think anybody even views it this way, right? So I don't know if you guys have obviously seen, like I showed at the top there, all these smaller crypto brokerages, exchanges going under potentially, or being in horrible situations where maybe they have to get acquired or something like that, right? Just very, very bad situations. And so we have all that going on. You know who's going to end up benefiting from this over the coming years? It's going to be a few core companies. The biggest of the big dogs, Robinhood, Coinbase, company like FTX, those companies, the biggest of the bigs, are going to end up benefiting because they're going to be able to swallow up all the smaller players. There's going to be massive consolidation, and there's only going to be a few players. Meanwhile, at the end of the day, people are still going to want to end up buying Bitcoin and Ethereum and different cryptos over time. Like, just because crypto's going down right now does not mean crypto's down for the count and it's never coming back. Believe me, all of a sudden a year from now, 2 years from now, people are going to want to get back into Bitcoin, Ethereum, and the other cryptos as well, okay? And so when people go to do that, they're going to have a few core players to get into. One of them is going to end up being Robinhood. And so it's just kind of crazy to think that like a company like even Robinhood is going to end up benefiting long-term massively by all this destruction that is happening in the crypto market right now. And that's just the way it plays out, right? And it's no different than the banks, right? You have a few of the biggest big dog banks out there that just really dominate the entire market. JP Morgan, Bank of America, Wells Fargo, those type of companies dominate. And like all the other banks are like so minuscule and small compared to those ones, right? It's interesting, right? Now, horrible news for the economy. The Atlanta Fed GDP Now numbers just came out, and now we're at negative 2.1%, which means the economy is likely already in recession, which is something I've been saying for a bit, and I know Kathy Wood said that recently as well. So yeah, this is not good. Not good at all. And at the end of the day, the Fed is going to have to admit that we're in a recession right now. I think they're very scared to do that. And the reason I think they're very scared to do that for a few reasons. One is it's like the reality finally hits everybody when Jay Powell actually comes out and says we're in recession. It's going to make worldwide headlines like instantly, and like that's going to get out there to everybody, not just in the financial media, but that's going to get out there to everybody in general, right? And so I think that's definitely something that they're fearful of. And I think the other part they're fearful of when, actually coming out and admitting like, hey, yeah, it looks like we're actually in recession right now, is when you're in recession, all of a sudden you have to start talking about potentially cutting interest rates. And the Fed's trying to raise interest rates to get inflation down right now. And if they all of a sudden have this situation where, the economy's worsening and going into recession, and they're like, well, we got to keep raising rates. They don't want to be in that situation, right? And Jay Powell doesn't want to probably have to answer those sorts of questions, right? Because that's an ugly situation, because now you're trying to like balance this. I'm trying to get inflation down, but crap, I just admitted we're in recession now. And so we really should be dropping rates, but we really need to keep raising rates to get inflation down. So they're in like a no-win situation. And so I think that's why the Fed's trying to prolong this as far as possible. But at the end of the day, I think it's just a matter of time before Powell has to come out and say, you know what? Yeah, we're in it, man. We're actually in the recession. We believe we're in a recession right now. And then you get obviously confirmation of that as well, right? Now, a company like MU just had some horrible news. I don't know how many of you guys got to see my Apple video because I released that super late last night. So a lot of you guys probably didn't even get to see that Apple video I released. But essentially, in Micron's, by the way, Micron stock's down 44% year to date. Micron, what they basically make memory chips. So, all your electronics products, whatever product you're watching this video on right now, that has memory chips in it, okay? And MU is a massive player in the memory market. Now, MU just came out and said that basically there's a huge drop-off in consumer demand for PCs and for smartphones. And therefore, they're going to have to bring down all their numbers, okay, for the rest of this year. And so what this means essentially is consumers are pulling back heavy and the OEMs, the original equipment manufacturers, which could be companies like Apple, are basically saying, hey, we're not selling this product the way we thought we were going to sell this product, so we need to essentially, cut orders and things like that, and we need to cut down in inventory. So this is really bad news for the overall economy. This is obviously bad news for companies like Apple, in my opinion. And Apple was funny; it eked out a gain today, right? It's so funny how Wall Street tries to put on these these fake images of like Apple should have been down today, should have been down 5% plus. But Wall Street's going to try to bide its time. You remember a lot of Wall Street has call options riding in Apple, so they need that stock price to stay up for a little bit until they get enough positioned on the put side for Apple and short Apple. They want to try to keep that price momentum there in Apple stock for the short term, right? And then once once they can flip to that other side, right, which they're probably already starting to do on puts and shorting, then all of a sudden they can take that stock to where it's likely going, right? And by that time, you get confirmation from Apple about, hey, numbers a week, consumers being hurt from inflation, ... And then it kind of starts a little negative spiral for Apple stock, right? But yeah, not good news, obviously, for the electronics industry, not good news for the overall economy, and not good news for the biggest company in the world, which is Apple, okay? So, and that's obviously brought down all semiconductor stocks. And it's not good news for semiconductor stocks because remember, if let's say Apple or whatever smartphone manufacturer cuts production numbers, well, that also hits all the semiconductor companies as well. That can hit, Qualcomm. That can hit Texas Instruments. That can hit Skyworks Solutions and Cirrus Logic and all those companies, right? They all get hit as well. So let's always keep that in mind. Now, more bad news for the economy. Gas is still insanely expensive. We got pretty much the biggest travel weekend going on right now, and gas prices are at $4.84 on a national average. So, which means, a lot of markets around the country are obviously $5 plus right now, including some that are, into the sixes, just bad, right? Now, the only good news is, it's down a little bit. Gas prices are down a little bit from where they were a couple weeks ago when it was just over $5, but still, that's just not good, man. It's so bad for the economy. It's not even funny. And people are going to end up starting to just drive far less after this holiday weekend. That's just the way it is. Either out of need or because they're like, I don't really want to drive anywhere, right? Because it's so dang expensive. And if people don't want to drive places, they don't spend money. That's just the bottom line, right? If you're worried about that, you're not going to go spend money on that trip or that whatever, right? Go to that restaurant because you're like, dude, it's going to cost us a bunch of gas money just to get over there, right? Now, this is good and bad. Basically, if you guys haven't seen, this has been basically this entire year. I wish they would back up the chart all the way to January. And if anybody ever sees this video and works for this company, can you guys back it up to January so we can see the actual fall? But basically, I've been watching this entire year, essentially. And this essentially shows you, trucking rates, all right? And it's just been falling and falling and falling and falling. And basically for everything, van, flatbed, and refrigerated as well. Everything's just been falling and falling and falling for this entire year, essentially, right? And so this is really good news. If you own any companies that have to transport physical product, this is good news. Trucking basically becoming more affordable is good news for you. That is very good news for you. That means there's a higher probability those companies can reach better profitability and offset all the inflation going on. So this is good news for that. It's bad news for the overall economy, though, because when trucking rates are going down and down and down, it basically means we're in a situation where there's not as much demand for trucking, which why wouldn't there be as much demand for trucking? Well, let's see. Companies order way too much inventory. People aren't buying as much stuff, right? Because the gas pumps is taking all their money and the food store is taking all their money, right? And so, yeah, good news if you have to transport physical product. Bad news, very bad news for the overall economy, okay? And that's just bottom line there. And basically every single time you're in a weakening economy, trucking rates end up going down. And I don't probably see that getting better this year, just to be quite honest. Maybe in Q4, we'll see. JP Morgan last week, they said that this week we were supposed to be up 7%. 7%. So what ended up happening? Well, the S&P 500 fell 2.2% this week. So not only did it not go up 7%, it didn't go up at all, and it actually went down 2%. And the NASDAQ went down over 4% this week. Yeah, That's why you can't get your hopes up in this market. You just can't. Despite it, I don't care if it's, somebody at JP Morgan said this or somebody at this, you just can't get your hopes up, man. They're throwing darts out there, and, they say the market's going to be up 7% this week, and, we got NASDAQ down 4%. It just is what it is, right? Now, the fear and greed index is still in extreme fear, and we've been in extreme fear, and we've been in fear for quite some time now. And, it's hard to see that ending in the short term, at least, right? And I mean, everybody feels like we're so like overdue for some sort of like 2-week, 3-week, 4-week rally, and we just can't get in this market. And it's just because when you have all these recession fears with the inflation fears and the wall of worry is still up, right? You still got Russia, Ukraine going on. At some point, we're going to break down this wall. It's up there, man, and it's just in our way right now. And so, for right now, we're stuck in extreme fear. And I'm sorry I got bad news to bring to you guys. I apologize. Like, I wish it was all good, man. But, I gotta share what's actually going on. And the fact is, there's a lot of bad stuff going on in the economy right now, the stock market, and obviously the crypto market as well. So anyways, guys, much love as always. I appreciate you joining me, and have a great day.